Good morning, everyone. Sorry, I'm a little late, but we made it. Okay, well, another day of finding the bid. Definitely another day of finding the bid. Um, Pretty amazing. So what am I talking about? Hang on. I just walked in the door, threw on my headset, and boom, I'm on the air. So let me try and sound intelligent here. Okay? 73.91. Big look below and fail a couple of days ago, Friday. Couldn't get to it Monday. Tickled it today. Voom, right back up. So, overnight inventory is long. It's probably around 85% long, which means about 85% of the trading volume is above yesterday's close. And decent short covering. Again, we are inside that big range of Friday. Okay. We did a look below and fail of 70 of the Friday of yesterday's low, and we also did a look below and fail of 73.91, and we did it by exactly 1 point. We went to 73.90 and a quarter. My level is 91, so you could have bought 91 and a quarter, 92, and put your stop at 90, and you would have been all right. This level is a beautiful level. Don't forget this level when the next contract starts trading. Hello, Eat the Bid. Welcome to the room. Welcome to the people who have joined. Good having you with us. So sorry for the folks on YouTube who are just joining us now. I'm JJ, vwaptrader1 on X, and this is the tradingsyndicate.org. Our job here, what we're trying to do, what we're trying to accomplish, is we're trying to teach retail traders how to make money. Simple. We're teaching them how to manage risk. We want them to make money and manage risk. And we don't want them to lose money. Now, how do we do this? We do it by simply teaching people how the business works. And if people understand how the business actually works, they might be able to actually do business, right? If you don't know how anything works, how the hell are you expected to function and make a living, right? If I told you, hey, listen, we're going to bake bread, how are we going to make bread? I don't know. We're going to use some dirt and some water. It's going to be some pretty crappy bread. So let's teach you how to make good bread, how to manage your risk so you're not blowing up accounts and all this nonsense, right? And trade proper price action, okay? That's what we're going to do. Deal? It's simple. I didn't say it was easy, but it's simple, okay? It's a simple business. You buy low and you sell it, right? You short it when you see that there are sellers, and you cover when the sellers go away. It's a really simple business. We'll show you how to do it. We'll show you how to make money, and we'll show you how not to keep losing money. Right? That's the big thing. Some people get lucky and make money, but they can't keep it. Right? You got to be able to keep the money you make. Otherwise, there's no point in doing this. It's just like hitting yourself over the head with a hammer multiple times. So what are we going to do today? How are we going to trade this? Well, what we do is we use a 1 minute chart. Okay, so inventory is long. We're looking for a pullback. So we're looking for a short. What we need to do is we need to identify sellers, right? So you can see levels are working pretty decent. You can see that there's a seller here, right? You guys see that? There's a 58 seller. So on the open, if the market takes out 58, you know what? You know, right? You know if the market takes out 58 to the upside, you know the sellers have seen what? What have they seen? Right? You're a seller. You got 1,000 contracts for sale, right? You're seeing buyers. Exactly. Thank you, Moran. Right? Now, when you see those buyers, you raise price. And what we do is we just mark off where those buyers are. So now if you're a short seller, right? Say you, okay, I'm Mr. Short Seller, right? And I'm selling 53 3/4, right? I'm selling here because I've identified that there's somebody else selling. Now, if the market starts lifting above 54, 55, I know that I have what? What have I lost? I've lost my seller. If I've lost my seller, why should I be short? But if my seller is still there, aha, there they are. You can see them at 54 1/4, right? They're plainly there, like as plain as the nose on your face. The seller is there, right? Seller's there, you can stay short. If that seller goes bye-bye, you go bye-bye too. See? It's simple. Right? So if I was short 54, 53 3/4, and it started doing this, there's no reason for me to be short at 54 if they're selling it at 55. If you were feeling like Daddy Warbucks, you could sit there and you could go, okay, you know, if it takes out 56, I'll cover. But why endure the pain, right? Before the market opens, there's going to be some buying. So just get out of the trade, right? Get the hell out and regroup for the next trade. Because the problem is not being wrong, right? We're going to be wrong a lot. You're going to be wrong a ton in this market. Get used to it. That's life, right? Don't whine and complain about being wrong. Use the information you get from being wrong to turn your trading around and trade in the right direction. Or wait until you can identify a direction. Know what I mean, Jelly Bean? You guys understand what I'm saying, right? The sellers are just setting the price according to where the buying is. So if the sellers are your best friends, right? Don't be mad at the sellers, right? Don't be mad at the seller. The seller is trying to say, hey, psst, 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 right? There's buyers, man. We're going to raise the price, so don't be short. Get it? So simple, right? So if you're short, start covering. Get it? Very simple. This is not a complicated business. That's why you see people who are functionally illiterate who are worth $100 million, because they understand the concept of raising and lowering price. That's all this is, right? That's all we're doing. This is not rocket science, right? You want to make it rocket science, you're going to lose a lot of money. Well, unless you have a rocket scientist. But if you're not a rocket scientist, don't bother, okay? So that's how to get out of a bad trade. Market's open now. Let's see, do we get any kind of inventory correction? So what's the trade here? Right, so I'm waiting for it to come up to that 58. And then right up here it's 59.60. Right? On the open, when you open the market, it's like turning on a tap, a water tap, right? So what you're doing is if you're shorting this area, what I would like to see is it go above, take out the overnight high, take out 61 3/4 and come back in. Right now it's kind of screwing with you. It's going up, it's going down, it's trying to find some buying. See how it just went down and sucked everybody in? Now it's going to go tag that overnight high. Boom, there it is, right? They'll sell into that or they'll lift the offer, right? The sellers will tell you, oh, buddy, there's buying. Don't short it here. Wait till it goes above 61 and 3/4 and then comes back in. There's a stop at 62.5, right? Now this is where everyone jumps the gun and shorts. And sometimes it'll work out, right? Say you short 59, right? You got a gun to your head, right? Somebody's going, listen, man, if you don't take this trade, I'm going to blow your brains out. That's how you guys trade, right? You guys trade like someone's holding a gun to your head, right? I've got to take this trade, or this dude's, he's got a Glock on my head, man. He's going to blow my melon off, right? I've got to take this trade. Well, you'd be getting stopped out now. So you took the trade and you lost a little money. And that's okay, right? What I would do now is I'd wait and see if we stick that 61 and 3/4, and we just did a look above and fail of 61 and 3/4. If the market now comes underneath that white line on the next candle, which is opening in 37 seconds, then you know the sellers have moved down. If the sellers are raising price, that thing called the offer will move up. You see? Let them go and sucker all these people into buying. What we're waiting for is a clear indication of what? We're waiting for a clear indication that the market's on sale. Right? For now, you see every candle, the low is higher. Right? Now let's see. Watch that 61 quarter and 3/4, right? So if you're long a little bit, make sure that you put your sell orders out, right? Because it's choppy and nobody wants to buy the high, right? So now it's coming back down under 61 and 3/4. Look for the bid, right? Look for that bid. There we go. Now your short's starting to work, right? We did a look above and fail of 61 and 3/4, so you're short 60. Go put some bids in now, right? Go bid the market. Go buy it. Buy it back, right? It's yours to buy back. You're short 58, 59. You're buying them back at 56, 57, right? They're yours to buy back. Go and buy them. Make your money and book your profits. Okay? Now, if you're still short, next level of interest is 54. Okay? The reason why there was a 56 bid there's a standard deviant there. And the computers came in and started buying it. Right? Now let's see. If there's enough inventory trapped long and we run out of buyers, wait till we get underneath 65. I'm sorry, 55. Okay? Let the algos clean this up. Right? Let them do their job. 54 is a level for us. Right now they're just distributing. They ran out of sellers. So they ran out of product, they lift price. Soon as they see buyers, those sellers will lift price. Soon as they have to compete against each other, the sellers will lower price. Why? Because they have size. See how if you had shorted and you didn't cover, you got rocks in your head. Because I told you to. Right? Not the only buyers, Raj. The first buyers. Right? Remember the sequence that I taught you? right? Now wait for the next candle. This next candle is it's gonna be a doozy. Because if we hold 61 and 3/4, 61 and a half, we'll go up to that 66 and change. Right? This move down caught people short underneath 60. That's why they all came to cover in that candle. Now, is there follow through, right? That's what you're talking about, Raj. So the shorts came in and covered. Then the wholesale longs at 60. Then we come in at 61. Right now, what we need some real suckers to come in and buy it at 65 because I'm long 63.5 on 3, 4, right? And I got some out at 65. They're not taking anything over 65. So you know what? Take it at a quarter. Take it at 64 and a quarter. I'm perfectly happy to sell it to you there. Right? I sold a little early. So now we are going into 8 times cost basis. Now what is not happening? We're not getting any significant correction to overnight inventory yet. Why? Because the buyers are coming in, right? They're hot to trot, right? They think the ES contracts are magical, right? I'm going to buy an ES contract and rub it, and a genie will pop out and make all my dreams come true. So I'll pay 66, right? Look at. So if you were short 59.60 and you didn't cover at 56, 57, now you're getting your head kicked in at 69 if you're still short. Hopefully you covered. If you're long, take your sell orders and put them out. Which means enter them into the system. Because if this keeps up, we are going to go and try to tickle yesterday's high. Now, above yesterday's high, there's some supply. Okay? Do you guys understand what I'm talking about? Does this make sense? It's got to be simple. It's got to make sense. It's got to be simple. There's no reason to overcomplicate this business. It's a simple business. Could you discuss what you see knowing to hold the long? Right? Yeah, you got 3 points, right? Right? If you held for 30 more seconds, you would get 5, right? But you got 3 points, Pollux. You should be kissing the feet of the trading goddess, being happy about that. 3 points on one contract is $150. On 3 contracts, that's a $450 trade. That's $9,000 a month in extra revenue. Yeah, don't worry about that right now. You're switching from institutional to retail, right? You made 3 points. Who cares about 5? Right? If you were a wholesaler, you would have been happy for a tick. Do you get what I'm saying? Baby steps, right? Baby steps. Take the 3 points and be grateful that you made them, and keep trying for those 2 to 3 point trades. In time, as you get some experience and skill, you'll be able to watch the offer, and you might have more contracts and offer them out at 4 and 5, right? But you sell the majority of your inventory as soon as you can, because you're trying to get profitable and you're trying to be consistent. Savvy? Don't worry about the pattern from now. Worry about putting $500 in your pocket every day. Right? Exactly, more reps. You're not going to sit down at a bench press and bench 3 plates right away. Right? You might not be able to bench press the bar. You got to build up your trading muscles, right? And like Hans and Franz, I'm here to pump you up, right? That's all it is. That's all it is, man. There's nothing other than that in this business. Like, see here, right? You had a minute and a half to sell it higher. Now you can see that there's a seller at 66 and 3/4, 67, right? So had you been long 61, 62, take the 3 points, take the 4 points. Take it and run like you stole the frickin' contracts. Get it? When you first start trading, right? When you're now Pollux is an ex-market maker who's transitioning to retail. So he's just like a newbie retail trader. When you first start trading retail, don't try and hold trades longer. Don't get influenced by people who are like, oh, you should hold it and max out your edge. Guess what? You wouldn't know your edge when you first start out if it came up and fucking bit you in the ass, right? You wouldn't know your edge from a hole in the ground, and you still won't. An edge is something that you have to develop, right? It's not there automatically. So take the quick in and out trades. Don't poo-poo them. I'm not beating up on you, Pollux. I'm talking to everybody. Okay? This is the way you make money. Right? That's what you want to do. You want to make money. You start making small amounts and you work it out to larger amounts. Right? Don't let these people say, oh, at SMB Capital, if you didn't, you know what? You're not at SMB Capital. You're in your living room wearing your underwear. You don't have a credit and compliance officer. You don't have any trader development. Take the $150. There you go, Howard. Right? You're not sitting at a prop firm. You don't have the resources they do. Right? You don't have a risk manager. You don't have the resources of a prop firm. So when people say, "Oh, if you were sitting at this firm," guess what? You're not. You're sitting in your underwear in your living room trying to figure this out, and you haven't made $50 in 3 months. Take the money. For the love of God, take the money. Don't be stubborn. In time, you will maximize your edge. All will become revealed. Right? Looking for the high of yesterday at 77. We're going to come tickle it now. I see that written all the time. Oh, if you were at this firm. Well, guess what? You're not. You're not. You're not at a firm. So you have to decide, do I want to eat this week or do I want to pretend I'm a prop trader? Right? Right? Just relax, Howard. You don't have your trade here, right? You're in no man's land, so just wait. Chill out. Have a donut. Just relax, my friend. Still early in the week. I am expecting some selling as we get up to that 78 area because there's single prints, there's supply up there. Let's see how the market handles it. See how the candles are kind of small? The price action's a little slow. This is forced buying. Nobody really wants to buy it here. Now there's our single prints. Now if we're really out of supply, will start going into this area to get supply. Think of this red box as a storage locker, right? Or a storage room where ES contracts are stored from 2 days ago. And if we run out of supply, we'll go up and we'll pay those prices. Otherwise, we'll find a seller there. You can see it's kind of clicking through there. It's kind of chewing through there. That's trying to tell you, hey, buddy, psst, psst, psst. Buyers are coming in. We're raising price. Yep. This time it didn't. See that, Howard? We ran out of contracts, right? We ran out of Kaiser rolls, and it's a barbecue. We got to go into the storeroom and pay more. Get it? Now, if I had still been short at 74.58 or 59, I'd have blown up my account now. Instead, I switched, went long a little bit, and made back what I lost. Now, do you guys understand what I'm talking about when I'm trying to tell you to admit you're wrong quickly and get the hell out of bad trades? Does that resonate with you? Or do you still want to keep blowing up accounts? And it saying, I'm right, right? Learn, my friends. Learn. Learn to admit you're wrong fast. The faster you admit you're wrong, the faster that you see that a trade is not working, that the business reason for the trade is gone, the faster you do that, the less money you will lose. Wouldn't that be nice? Right? So when you actually make money, you'll make more because you're not losing as much. Right? Simple. It's a simple business. Right? And we want you to be successful. We want you to make money. Look at that. We went right through those single prints. We're in 8 times cost basis. Right? So we're in 8 times cost basis. The next area of interest is 74.90 and 3/4. Okay, if we chew through that, we're back up to 7,500 in a heartbeat. So look at this. We're above yesterday's high. Shorts who are trapped underneath yesterday's high are coming in to cover. Right? Learning to admit you're wrong, ATL, it's the most beautiful thing in the world. Right? It's the most beautiful thing in the world. So the trade for larger traders is look below and fail of 73.91. Rotation, what's our target? 75.11.5. That's a nice, beautiful trade for you. Right? Do the math. For the traders, for my big traders who are long, right? That's a beautiful trade. You could squeeze off 80 to 100 points on that trade because of the concept of rotation. Right? Rotation. This 73.91 to 76.31 area, the middle of it is 75.11. Right? There you go, Jam. Now you're cooking with gas. See, we already took that stop. We found some selling at 91. Now what are we going to do? We're going to backfill. We've gone up to create demand, right? Now let's go back and fill in that demand with supply. Where are you looking for bids? Show me your bids, right? Friends, Romans, countrymen, show me your bids. I'm looking at, say, 82 down to 81. So if you were short, say you're shorting that stop right up at 90, 89, 88, go put your buy orders in, because somewhere along here it's going to hit a large bid and pop back up. Boing, there it is, right? Now when it pops, what you want to do is go, oh, where are these guys going to sell into it? Because you know there's a seller here. And now they move down here. See what I'm talking about? So if you're short 88 and you don't want to cover 82, but if it pops 84 and goes 85, you should cover. A little common sense. A little common sense, right? You don't have to memorize pi to 25 decimal points, but you do have to have some common sense. When the market finds the bid, you should be the bid. When you're short, be the bid. Right? Remember Caddyshack, be the ball? This is be the bid. Now look, is that seller still there at 84.5? Look, there they are. If they see buyers, they'll raise price and you'll get an 86 print. I did a video that describes exactly this in our room and posted it. It would behoove you, always wanted to use that word today, it would behoove you to watch that video because it explains everything that I'm talking about here in detail. Okay? Detail. Right? We do these videos so you understand what you're doing. So you're not getting into trouble. Right? You're not trading the wrong way. Right? You're not coming up with these crazy ideas that you pull off of Twitter. You're actually trading the business. Get it? Right? That way you're not getting boondoggled by all these other people. Now, what's the next trade? What's next? I want to see if that 80 bid holds, right? If we break this 80 bid, you're naturally going to find buyers at yesterday's high. That's where the short sellers will be. So if you're short this correction down, that's where you want to put your bids, or as we call them, bids, buy orders, bids, whatever you want to call them. Right? It's yours to buy back now. They're going to front run it a little, right? Here we go. Here we go. There's 77, 77 and 3/4, and we're dropping in. There's 77. Let's see if there's a bid. Ooh, the buyers just ran away. Look at that. Look at that. Now let's see if this price drop here, if the shorts if they come in, we'll reclaim yesterday's high. If the shorts don't come in and start buying, this is going to drop all the way down to that 68 level. See? As it gets up to that 76, 77, watch. Where are they going to sell into it? There's a bit of an aggressive seller at 75. You can see him, right? Today they're trying to cover contracts. So you can see the volume in the new contracts starting to get a little bit more. Not a lot, but it's just starting. It's only Tuesday. So there's a bit of a bit here. There's going to be some selling when we get up to. There's that standard deviation, right? That's why they're selling into it. When you're below it, they'll sell it. When you're above it, they'll buy it, right? Until size blows it out of the water. As quickly as we went up, we came down quickly. Why? Because the buyers were those short sellers that Raj was telling us about. Short seller and then everybody who chases price, right? So they're all running around like chickens with their heads cut off following each other. That's why they all bail. That's why there was no bid support at 76, 77. Because the short sellers said, oh my God, the sellers are desperate. Let's drop our buy orders down to 72. So in 2 minutes, boom, from 77 all the way down to 72. Right? This stuff is very, very common sense. It's going to take you a while to get used to it. Right? It's going to definitely take you a while to get used to it. But after a while, you'll see how it makes sense. And once it makes sense, you're going to have less trade errors. You're going to have less times when you're trying to buy the tops and all of this stuff. Right? You're just going to get it. And it's going to work. Right? Are you going to get stopped out? Yes. Are you going to be wrong? Yes. Right? Inventory is still massively long. Right? For it to correct, it needs to come down and tickle the close of yesterday. So we still have not corrected inventory in any meaningful way. We've had a little inventory correction from 92 down to 68. But the overall session inventory has not corrected. Now remember how I told you there'd be bids here, right? So stay with us, Italian trader. I know it's a little bit confusing now, but over time, see there's inventory of 5 minutes, 20 minutes, an hour, right? All that stuff. Pretty soon, you'll be an old pro at this. Oh, you will. You got no choice. You're with me now. Right? I'm like your old Italian grandfather. I will haunt you until you make money. Right? I will absolutely haunt you until you make money. I'll bug your ass so much that you'll be like, "Oh Jesus, I got to make some money. JJ's coming." Now, do we do a look below and fail of 61 3/4? We're looking below. Wait for the next candle. Right? Wait for the next candle and see, because that's if you're a buyer to go long, you're going to buy a few at 63, right? 64, right? And you'll be looking to sell them, right? But wait for the next candle. Wait, because the next candle will confirm whether you've reclaimed 61 3/4. There you go. I'm long 64, and I'm selling them like I stole them here. You want them? Take them. You want them? They're all yours. They're yours for the taking. I'm long 64, and I've got 4 contracts left. I am flat. Thank you very much. Goodbye. Done. Long 64, out 68 and 60, 67, 68, and 69. On about 8 E-minis. And I'm done. I did not catch the short on the way down. But I caught the responsive long. I knew it would do a look below and fail. I knew there was a little bit of, we'd see some love down there. Why? That's where we launched the move from. You see here? Look. Remember there was a seller here all morning? That's exactly where we flipped to the bid. Right? The position is underneath 60. Right? Or as they would say in Montreal, la position. The position is under 60. We sold it all the way down to where we bought it. We stopped and we lifted the offer, and they came in like gangbusters. Buy 64, sell 66, 67, 68. Right? Simple. Simple, 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 simple. We all need to do work on it, Raj. We all need to do work on it. We all try and front run the candle. You're in good, completely good company. Okay? Why would I decide to wait for the next candle and not the one that bounces? You tell me, Pollux. Look at these 2 candles, right? Right? We're going to hurt your brain a little bit here. I want you to look at this candle here. And then look at this candle. Tell me what's the difference between this candle and that candle that would make you wait. It's a good question. Without seeing the, because you're a businessman, man. Right? Are you hopped up on Red Bull and snorting lines of Coke? No, you're going to wait. Because you're a business person, so you want to see if that bid is there. Don't forget that you used to work in the business. There's some things that you can bring with you. You're looking for the bid. The bid moved up. Do you understand what I'm saying? So what you need to do now is rewatch this video 10, 20, 30 times, rewind the chart, and look at that price action. Just like watching game film. You get what I'm saying? If you were a linebacker and you're playing a team, you would watch game film to see, oh, that running back runs through this gap or that gap, or this guard pulls this way or that way, or he twitches his fingers when he's going to pull to the left or the right. You know what I'm saying? You got to dig in, man. You got to dig in, right? And focus, right? And you'll build that database in your head. You're going to train your eye and your brain to work together. Get it? And at first, you're not going to, right? Exactly. You're waiting for the seller to lift. You're waiting for the bid to follow the seller, like a golden retriever following somebody up with a dog treat, right? Don't worry, you're going to get it. I know at first you're like, Jesus, what am I looking for? There's so many things. This guy says that. This guy says that. Don't forget where you came from, right? You came from market making, right? You got this. All you got to do is learn how to think now and rewind this stuff over and over again. You got it. It's all inside you. You just have to express it in retail trading terms. Don't worry. You're going to be fine. Okay? You're going to be just great. Just hang in there. This whole business, right? Retail trading, retail trading is discipline, repetition, and focus. That's all it is. Right? It's knowing a little bit about the business, which you do because you came from market making. Right? Now all you need to do is learn how to handle your risk and learn how to get in and out of trades quick. You're going to use a lot of the concepts from market making, but you're just going to scale them down a little bit more. Right? So your risk is going to be less. Right? Now you can see that it's starting to fade here. Right? So it worked here. The look below and fail, look below and fail. Now it might not do it again. Let's see. Right? You're going to be okay. Don't worry. This whole business is just repetition, discipline, focus, 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 focus. Right? Because we're retail traders, right? Focus, attention, and discipline. Right? Because we're retail traders, we can't afford to be wrong and be wrong a lot. So we have to get in and out, get paid quick, right? So your attention, when you're trading, right? When you're trading, the building could be on fire and you should still be focused, right? I've traded through 2 earthquakes and 1 or 2 building fires, and I never left the desk. Look at that bid, Pollux, right? I wasn't even expecting it to bounce a third time. Somebody's got an appetite under 62. Every time we open that 62 door, boom, they come in and start buying. Right? They're there. It's a beautiful thing. There's the bid, right, Jem? We're going to go test it again. Hitting same putt, same line and length for thousands of times. I don't know about that, Raj. The only thing I learned from golfing is I watched The Legend of Bagger Vance. Now let's see. See, the bid's still there, but the reaction wasn't as strong. Let's see, right? Will they buy it? Will they not? Right? I'm not going to gamble on that. Eventually, if you hit the same level over and over, it's going to break. Because the sellers see, look, see new candle? High of that candle is where? 61 and 3/4. So the sellers have moved down from 66, 67, Pollux, underneath 60 now. So where's the natural place for the next long is VWAP. We're looking for 54 and 1/4. Come down, take out VWAP, but don't try and front run this. Front running is for people who have cash, right? To buy it here and put your stop at 50 and maybe buy it on the way down, put a position together and then rail it, you have to have money to do that, right? What you want to do is wait until the candles show you that the sellers don't have to sell lower, right? Oh, no problem. No problem, man. There's VWAP. There's no sense trying to front run VWAP. Not unless you're trading with a couple $100 million and you're really fast. If it can't get back above VWAP, you're looking for short. Okay? Wait for the next candle. You're always waiting for the next candle, right? You're, JJ, why are we always waiting? Confirmation, right? We're waiting for the market to say, okay, it's safe, or it's safer. That's what we want. Beautiful. See how the sellers have moved down? So now you're short 50, 51. Where are you going to bid? Quickly now, where's your bid? Right? If you're shorting underneath VWAP, your stop is above VWAP. Don't be crazy. Right? The overnight point of control is 44. So you can short 50, 51, and if it takes out 53, run for the hills. Right? As Iron Maiden says, run for the hills, run for your life. Do you guys get it? We're coming back to the overnight cost basis. We're coming back to the area that we bought the product, right? So you are short 51, you're short 50, here's your cover 45, 44, you've made your 4 or 5 points. Nicely done. See? You identified the seller. You let the market show you. By being smart, you were patient, and you waited until the market showed you the offer. Right? Now, if you guys are serious about this, right? If you really want to make money, what you're going to do is you're going to rewind this session later, right? You're going to watch the video I posted in the room about 3 hours ago, right? And you're going to go and rewind your charts, and you're going to look at this price action 10, 20, 30, 100 times. And you're going to make notes. And you're going to tear through this and dig into it. Otherwise, enjoy your crocheting and needlepoint class tomorrow. Because today you're a trader, tomorrow you're doing needlepoint. Or macrame. Right? Or underwater basket weaving. Whatever you so desire. But if you're serious, journal, tear things apart, ask questions, watch the video, ask me what am I talking about, message me, right? You can tell who's serious and who's not, right? You should be digging into this, right? You should be digging into this. If you want to make a living at doing this, you're going to have to dig in, right? It'll work. You just got to dig in. Guess what, Pollux? You'll never stop learning. I've been doing this 34 years. I've taken 200 companies public. I've traded billions of dollars in order flow. My clients are billionaires. They have the lowest cost basis on everything. Guess what? I learn something new every day, retail trading. This is a business where you will learn something new every day. When you stop learning is when you start losing money. There you go, ATL. Right? There's always something new to learn. I will always notice something new. Right? Look at this. Now, that's a beautiful short from 48.50, right? So you covered some at 44. My bigger traders, who was asking? Italian trader. You were asking about that inventory correction. Here it is, brother. Here it is, right? We're dropping in, right? We're dropping in nicely. We still got a ways to go. Yesterday's cost basis is 16 and yesterday's 5 p.m. close is at 12. So we are nicely correcting inventory. It took some time off the open to do so, but that's okay, right? We got time, right? We got time. We got lots of time. Nothing but time. Target right now, short-term target is 74, 20 and 3/4. And we're dropping in like Laird Hamilton at Jaws. We're just dropping in and dropping in and dropping in on that wave. When the seller stops selling, we cover. Right? We're selling alongside the people who are putting it on sale. They paid 16 for it yesterday at the end of the day. They sold it all the way up. Now they're putting it on sale, right? So they sold it at the fancy stores up here, right? Now we're taking that stuff and now we're taking it, we're putting it in the truck, and we took it all the way back down. Right? TJ Maxx, baby. Here we go. Right? You get the max for the minimum. Right? See, it's simple. Right? It's simple. There's 20 and 3/4. Let's see if we get it. Let's see if we catch a bid. Right? Now, what are you going to do? Wait for the next candle because we're still going lower. There's no reason to just buy a level. Wait, see how that level takes a punch. Right now, that level we hit 20 and 3/4, and it folded like a lawn chair. So wait, let's see if it gets up and gets back on its feet. Right? Give it another 20 seconds. Right? Standing 8 count. Right? Just like Ali Frazier. There we go. No reason to rush it. Just take it easy. Wait for your trade. That's all you got to do. There we go. I'd still wait a little bit, right? Because you basically got on this, if you go long, as you can see they sold into it at 24, right? So now you know that there's sellers at 24. Because the next seller up is 30, so wait till it comes back up over 24 and buy it, right? Because if it clears 24 and the offer lifts over 25, see there's that standard deviation there. Your target's going to be 30 and then 34, right? See the seller's still there at 24. There's no reason to go long. No reason to go long at all. Until we clear the 22, 23, 24. Till then, let the large traders figure this out. Right? You don't have to worry about it. See how simple it is. Right? Because you know when you have to work and you know when you can relax. Right? You know, you don't have to work now. You can just relax. Let the large traders pick up the bill here, right? Let them pay the bill, right? It's like when I go to dinner with Omni's father and his uncle. You don't reach for the check. You know, they've got a stock at $64 a share. You don't reach for the check, right? Here we go. Here we go. They're starting to clean this out. Let's see if we can take out. No, the sellers are still there, right? So why buy it and get stopped out, right? Unless you're bored. If you're that bored, call me. I can give you some work. I'll put you to work. Right? I'm sure Lear has some gardening you could do. There we go. Signs of life. So you're long 24, sell them at 26, 27. Boom, 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 boom. There you go. We told you about it 5 minutes ago so you could prepare for it. You should be out by now. Long 24, out 29.30. There you go. 5 points. Thank you very much. See? This is why you wait. This is why you're patient. So you're smart. And if you take a bigger position, you don't know that candle's going to be that big, but if you had a few extra contracts, sell them like you stole them. Don't sit around and wait for someone to go, "Hello, sir, would you like to sell you?" Sell them. Somebody shows you a bid, you hit that bid faster. So fast it'll make everyone's head spin. Okay? Because you know they're going to sell into it somewhere up here. You guys understand what I'm talking about? You're very quiet. So you're either all trading or you've all had some space cakes. Okay? Good. All right. Any questions? This is how you trade with simplicity. The more simple your trade, the more simple your execution, the less crap that you're looking at when you're trading, the much more better your chances to actually make and keep money. The more you complicate it, the more things that you have on your screen, right? The more you're going to screw it up. You'll screw it up. You're guaranteed to screw this up if you overcomplicate it. Right? So take out, most people, they start with me. I go, you know what? Take 90% of the crap that you use off your chart and just watch the offer. Right? It's okay. So am I, Moran. Nothing wrong with golden retrievers. They're wonderful dogs. Beautiful look below and fail of 20. Right? But you'd be buying 24, 25, selling 31, selling 30. Right? The ultimate destination is 48. But let's see what it does now. Right? Beautiful trades. All you got to do is you wait for them. You got to know where you're doing business and why. If you don't know where you're doing business and you don't know why, right? It's just because you haven't learned. Man, if you're always hesitating, you need to trade more. Right? You have what they call happy feet. That's common. Don't worry, I had it too, the hesitation. You don't want to be wrong. I understand that. I was the same. You don't want to be wrong, so you hesitate. It'll get better over time. Also, Miranda, also this is RTH, right? This is RTH, right? It's a much faster market than at 9 o'clock in the morning our time, right? So just sit and watch RTH. Do your trading in Globex. Run your trades in Globex. Jam, we all have the same problem. Even after 34 years, I will hesitate if I'm not really dialed in. If I'm talking to somebody at the same time and I'm trying to trade a little size, I'm not dialed into the market, I'm going to hesitate. Right? Right? It'll happen. You will hesitate. You've got to have that laser focus. And guess what? You don't get laser focus unless you work on it. Hesitate. RTH is not really where you should be playing Moran right now. You should have done your trading by RTH because you're up early, right? You're up early, right? We want you to work from 7 in the morning, right? Now it's 2 in the afternoon, right? It feels wrong. Exactly, right? You can make your money and not even have to look at RTH unless you're bored, you know? My perfect days are the days where I make a little bit of dough before RTH and then I'll just scalp micro and RTH just to keep you guys company. But if you guys aren't there, I'm not even going to scalp micro, right? If I make $2,000 before the open, why the hell do I need to trade RTH, right? Take the money, right? If I'm not doing a session with you, if I'm at 1,000, 2,000 before the market even opens, I'm going for a walk, get some exercise, enjoy this beautiful Liverpool city, You don't need to kill yourself to do this. That's the point. Right? That's the point. You don't have to have a heart attack sitting in front of the screen for 25 hours a day. Right? See, I've got Omni now. He's not even sitting in the markets. That he's riding motorcycles around Vancouver. It's okay, Moran. Remember, I told you that this market's going to get harder and harder to trade. As we go through the summer, those of you who are watching on YouTube, do yourself a favor. Drop $20 and come join us in the room for a month. And I promise you'll learn more in a month than anywhere else in the world. I'll teach you more in a month on how to actually make money than 10 years anywhere else. Right? They'll teach you all sorts of crap and fill your head with flights of fancy. I'll show you how to make money. Give it a shot. Sellers are moving back down. Oh, we're done. Okay. Thank you, everyone. Done for the day. Have a great, great morning, those of you in the States. Have a wonderful afternoon. Today we'll be recording the first episode of Proper Villains, the podcast based on my book, which I hope one day gets published. And we will get that out immediately. Thank you, everyone. Come to the Trading Syndicate. Learn how to make money in this business without driving yourself insane. Okay? Thank you. I appreciate all you guys. Great questions today. Pollux, you keep at it, man. We'll get you there, okay? We'll like the song says, break on through to the other side. right? In the words of Jim Morrison and the Doors, okay? I've got a couple hundred pages written on the book. I need somebody to edit it, and I think I'm going to get Cisco to edit it. There you go. You can build a really nice income 5 points at a time. Beautiful. Thanks, everyone. Thank you, Jonathan. We'll see you tomorrow. Keep the trade simple. Trade with the wind at your back, my friends. And always remember, do not take candy from strange market makers. Okay? Have a wonderful day. We'll see you tomorrow. Appreciate you guys. Bye for